All right, welcome back. Good afternoon, ladies and gentlemen. Dan here with Dan's Trades. Appreciate you checking out the videos. Please let me know if you ever have any questions or suggestions. Happy to help. Today is CPI, or was CPI, I should say, and we're going to take a look at what I did for my trading today. First off, I want to say the left side is ES, right side is NQ. In case I didn't cover some of the basics, I'll try and slow down because sometimes I do know I like to talk a little quick. So we'll slow down the pace a little bit here today, and I'll tell you, so let me turn this on. I can show you exactly where I took trades today. So let me turn on, oh look, the executions are on. Maybe let's check the NQ side. Executions, oh, they're turned on. That's right, because I didn't take any trades today. Boom, take that, market. Can't lose if you don't trade when there's a major news event. And just FYI, the big faux pas is do not trade leading into it. So the key on major news events, whether it's FOMC, CPI, NFP, all the major news events, red folder days, we like to call them. Wait till after the news breaks and then take what the market presents to you. Because you don't know if this is going to fly down like it did today, or you don't know if it's going to fly up. If anybody tells you they know, I'd love to hear about it. Even the best people in the world that I know are traders that know the algorithms don't know that, or I haven't seen if they do. All right, so long story short, what do I do on days like this when I didn't take a trade is I do a review. So let's see where the best setups were for the day. And this is definitely call it recommended practice, best practice, whatever you want to call it, whether you take a trade for the day or not. I always recommend to go back and review, and shout out to Tanya Trades because I just listened to one of her videos again yesterday. She's another similar ICT trader because all my trading now is based on ICT concepts. And if you haven't figured that out yet, well, that's what it is. I've traded many other indicators out there. Never again will I. I should never say never, but in this one I pretty much mean it because I don't like absolutes, because you should never say never, but I will never go back to RSI. I will never go back to VWAP. I will never go back to anything that's a canned indicator because they are all lagging indicators. I strictly 100% use price action now and liquidity and imbalances because that is exactly what moves the market. So let's take a look at a review for 8:30 New York, which is these large candles, one on the NQ here, one on the ES here, where the CPI report coming out. So that was a big shoot down, so it should be on the sidelines there, but we can see they formed fair value gaps in the big move down, so it's definitely displacement. Big huge elephants jumping in the pool, all the water went flying out. So let's mark out some of these boxes. And this would be, so we're going to do this one by one, so check it out. This is a SIBI, sell side imbalance, buy side inefficiency, and one of these days I'll say that right the first time. Tongue twister for sure. So we'll mark that on with both of them. And if you don't know, it takes 3 candles to form them, so it's the low of this candle and the high of this candle, leaves the gap in between, which is the fair value gap. Both indices did similar movements there, and they are bearish until they're not, or vice versa if they're a BISI. So this would be an example of a BISI right here. I'll mark it out quick. High of that candle, low of this candle. This is a bullish fair value gap until it's not, because it's a BISI, that's a SIBI. So they're polar opposites. So let's take a look and see what happened here. So once a fair value gap is invalidated, meaning a price close above it, it is inverted. Not the wick, the close. So the close of this wick, as we zoom in here, is, watch up here, let's just do this one by one. Let me put this, I can go back and forth and we'll go do both maybe. So this wick, the low is 48.2725, and the close of this is 48.2775. some reason I think I'm reading that wrong. Low, 48.27.25, right there. Look right here. And then this one, the close, 48.27.25, the exact same dollar amount. So this did not close above, so this is still a bearish fair value gap at this point in time when we're right here, because we have no idea what's going to happen. But if you're looking to play this as an inversion to potentially take out relative equal highs above, we did not get a close above, so we cannot treat this as an inversion. We would not take a long there, going for what some people call data highs up here. So the next, and these are 15-minute candles, so these hold more weight than lower time frames. The more I look at 15 minutes, the better I like them. And then the next 15 minutes, candle closes below. It doesn't close below, so we don't have a move down yet, but it does close below what is called consequent encroachment, or you can just call it halfway point, 50% of this fair value gap. That is a key point there too. And the next 15 minutes closes below. So this did respect the bearish fair value gap. So different ways of entering on these. You can enter when it first touches. You can enter at consequent encroachment. You can enter at the top as long as it doesn't close above for a short trade. You can wait for a close below consequent encroachment, or you can wait for another close below for a type of confirmation type trade. The problem with waiting too long is if it closes far below like this, that just makes your stop that much bigger, because your stop has to be above this fair value gap. So you don't want to have your entry here and your stop 50 some ticks away. You know, maybe you can, depends on your risk tolerance, depends on what you're trading. Micros maybe. Everyone make sure you do that. Either way, long story short is your stop gets larger the farther away from the fair value gap you enter. So we see, once we enter, we're looking to take out previous lows. This one, the previous low from New York PM was already taken on the CPI report announcing, so you couldn't use this low anymore, but our next swing low would be here. And then below we see, we'll mark that sell side. No, I don't want to delete the template. Thanks for asking. Sell side liquidity. And this is on a 15 minute, so if we want to M15, just so we're staying to our nomenclature. Our next swing low, we can mark out, and super basic. Swing low just means a low with a higher low on each side of it. This is a swing low. And then we have our next swing low. Oh, we have another liquidity point here on the session low. So we'll put a ray on that as well, because you see it marked out with the yellow right here. So I'll just put another BSL on, because the session low is also a liquidity area. And then right below it there, we just see another one. So we'll mark all these out. These are actually relative equal lows. We have 47.98.25, 47.97.75. So those are pretty, that's where you get relative equal lows. So I'll just mark one of those, the one that's a couple ticks below. If it's going to take one, it's most likely going to take the other. So, and we see obviously it did. Then our next low. So we'll keep marking out these lows, because these are going to be your targets. They just keep on trucking. Look at all these we took. Let's even just take the swing low here. Yesterday's. Just took out all these. And even all the way went all the way down to, this could be interesting, watch this. Here's a bullish fair value gap from Tuesday. Did violate it, come back up. I would not trade off of that, because that is too far away. We got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 sessions back. It's interesting to look back in hindsight where that worked. But you would do not need to hold for a target all the way down there to be profitable. If you're taking a trade up here, even if you're on the side where you want confirmation and you take a trade below, I mean, 20 handles, 30 handles, 35 handles, which is 140 ticks. I mean, how much do you really need? You tell me. Everyone's different. There is no right answer. But that took out all kinds of sell side liquidity on that move down. All based on this 150-minute time frame, and you could hold until your goal is reached. Whether it's 1 micro you're trading, whether it's 10 minis you're trading, everyone's different. There is no right answer. That comes down to risk management. But this is a good way to just look and see where were the best trade setups for the day. Again, I always want to look back at what else can you do better. So if you do like to use inversion fair value gaps, I like to use them in conjunction with everything else. It's not just one or the other. There is no one PD array to rule them all. It's a matter of understanding all of it, if you ask me. So here's a perfect confirmation trade, I would say, or setup, is you can wait till this closes below on a 15-minute, and you can take out these equal lows. Look, there's relative equal lows right here. Yeah, they're pretty close. But yeah, we just marked out 10 other sell side liquidities you could go after. If you're looking to just scalp because you're quote unquote scared, you don't have enough seat time yet, even here to these relative equal lows is 35 ticks, almost 10 handles. Some people might tell you that's not enough, you shouldn't trade on that. You do whatever you need to do. If this makes your goal, that makes your goal. Because now you have multiple PD arrays that are lining up, in addition to another bearish fair value gap right here. So there's all kinds of ways you can trade this one down. Again, fair value gaps are based on the candle that they're created on until they're invalidated. So this one was a bullish fair value gap at this point, and we see price touched it right here, closed above. There would not be an entry here because you need this candle to create this fair value gap. So if you were to treat this as a long, you would enter right here, and the stop has to be below, and you would be stopped out right here. But at the point that this candle closes below this fair value gap, it now becomes an inversion fair value gap, so we change it. So biggest key there is don't be in a hurry. Everyone's always in a hurry. If you're in a rush to get your trade on, if you feel like you're gonna miss it, then don't take the trade. That means you're not ready. And trust me, from experience, I've been there. The 1 minute candle's moving, you're trying to get in, you're looking at a 15-second chart, you're looking at a 30-second chart, 1, 2, 3, 4, 5 minute. In the beginning, it's going to feel like you're going to miss everything. So if you feel that way, just slow down and tape read more. And what I mean by tape read is just watch it. As you start to learn these concepts, if you're new to them, and you start looking at, like, the market is still open right now. It's almost, actually just closed. It's 3:02. We see it's just after, just post close. It's 4 o'clock Eastern, 3 o'clock right now. So we see the New York session just ended. I'll lose my train of thought there, but yeah, so this was a bearish fair value gap, didn't close above. It would have been inverted had this closed above, then we turn it orange. So just some basics on hindsight. Not saying I would have taken this trade, but this is just a good idea for you to do as a trader to get yourself better. Just look and see where the fair value gaps are. Like, here's another one. This would be bearish until it's not. So do you want to take a short trade? Your target, your stop's going to be way up here because 1, 2, 3 candles formed. That's way too much risk. I would never take anything there. Plus, look at what we've just done. So if you're 1, 2, 3, all these, yeah, you could have a short bias based on everything that's happened, but it's not going to go all the way to zero in one day. It's going to recover sooner or later. And look at all the buy side, or excuse me, sell side liquidity that it took out. Then look for the reverse trades. So there's where you can look at once this closes above, which did right here, then it becomes an inversion fair value gap. Then you can actually look for it to work with other confluence of other PD arrays to look for a long trade. If you didn't have anything here, maybe you didn't get to your charts, but now we're in lunchtime, so I shouldn't be trading during lunch hours. PM session doesn't start till here, but this can give you a setup potentially for the afternoon to potentially get into. Here's the next one. This one's going to be bullish because it's never violated, price never even came back to this one, so no trade there. Here's another one. So no trades. I wouldn't, after a major move like that, you're going to want to wait anyways because there's going to be consolidation. There was a pullback up at very similar, if I remember right, or let's take a look at the NQ side of the house. Let's mark those out as well. So I'll grab our fair value gaps. Pause this guy for a second here. Oops. All right, so let's take a look at NQ here. We have the same one already marked out, bearish fair value gap. That one we did slightly close above consequent encroachment, but never above the other one to invalidate it as a bearish fair value gap. So this is still bearish. You can take the trade, again, same places, one entry, one entry, one entry. CPI days, I got no problem with waiting till you get some confirmation. And let's lay over. I see another gap right here, which is going to be bearish until it's not. So here we see, if it were a bearish fair value gap, you would enter your trade 1, 2, 3 candles to create it. Candle opened here, you would enter your trade right there. If you had a bullish bias and you thought it was going to come up and take this high, and your stop would have to be down here. Well, here we see relative equal lows that we already talked about on the other side as well, and a single high up here. From what I've seen and from what I've learned, and I believe ICT also teaches the exact same thing. Michael, correct me if I'm wrong if you're watching this somehow, some way, but price is going to take out these relative equal lows before it's going to take out a single high above. The draw on liquidity is going to be down here. So this is confirmation. You didn't get up. So if you did have to take a long trade, you get stopped out way down here. So again, way too much. You know, that's 50 handles over on NQ now. So you're not going to set a stop that long. So if you're trading with stops that big, I want to talk to you because that's some deep pockets you have there. So this would obviously be an inversion fair value gap, and it wouldn't be until it was closed below, which is here on a 15-minute time frame, but I'm pretty sure if we drop to a 5, just out of curiosity, there's typically always going to be lower ones. I'm not going to switch and do everything. I'm just looking at the 15s just to look at hindsight, because the better setups on a higher time frame, or I almost call that an intermediate time frame, the better you're going to be. But on a 5-minute standpoint, it did close below on a 5-minute candle. And just out of curiosity, let's draw bearish one there. It would be until it's not, oops, excuse me, bullish. I apologize if I say things backwards. It's part of being 51 years old. Yeah, I'm not ICT, but we're the same age, so I think that's awesome. All right, so look at all these stacked up fair value gaps inside of the 15-minute fair value gap, because that was the move. So that's there, that's there, that's the last one. So there's 3 of them inside, so there's 3 5s inside the 15. So invalidated, 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 close. You could absolutely take the trade there. If it's going to go back, you're violating a minimum of 3 PD arrays right there, which we just did. So we violated those. So we'll make it bearish. We'll make it bearish. You hear in teachings that 3 PD arrays, whether for it to be stopped out or that price is going to go somewhere. So if you're violating 3 PD arrays, which make this up, so the 3, let me actually make these would be inversions, just like the 15. Technically it's the same thing, but not, if that makes sense. So now we have 3 fair value gaps that were initially bullish, 4 if you count the 15-minute, all being violated with this one 15-minute candle, or excuse me, one 5-minute candle, because we're on a 5-minute time frame right now. Those are high probabilities that price is going to continue lower. This slight little retracement in this 10 minutes post CPI. So here's where now, once you understand the concepts and timing, there should be no reason that you're rushed. If you feel rushed, it means that you're trading over your head, I'll call it, or over leveraged. You need to start with one micro after you've demo traded, after you've tape read, if you are worried about price moving against you because you've had it stop you out how many times in the past? Countless times, right? So you need to get to the point where you are indifferent if you get stopped out or the trade goes your way. Easier said than done, I 1000% understand, but until you get to that point, you should not be trading live funds, or you should not be trading the size of funds that you are if you are too nervous or scared about the trade. So let's jump back to the 15. Take a look at the rest of the day here. Did we make any more on the way down like we did over on the ES side of the house? Let's draw out some fair value gaps. Bearish to start because we're on a, what type of inefficiency? A CBI. Sell side imbalance, buy side inefficiency. The paint roller only went down. There was no buy side offer on the way up, so sell side. Oh, it was only offered, so let's make that bearish. So the only difference there being is why is one orange and one red? Because candles created with these three creates the imbalance, which is bearish. When this candle's initially created, it's bullish until it's inverted. And then it becomes bearish, but it's an inversion. So just to color it accordingly, I copy Michael and I make it orange. Next one, let's see any more. What's the low of this candle? 16,866.25. 16,866.50, so there's no gap here. There's a gap here. Again, you're down here after taking out how many liquidity points? Yep, that one's bearish, that stays there. Yeah, so smoked that one, smoked these relative equal ones, smoked that one, took out that low, very similar to yes. 1, 2, 3, 4, 5, 6. Sell side liquidity, points of interest. So all bearish this one. Check out the wick. We'll put the low of this candle is 16,926.75. The high of this one, 16,926.75. Coincidence? You be the judge. I know what I believe. So that is completely closed off. Then price went away. Created another bearish fair value gap, running more liquidity. Then we had the reversal. So what do we have on the upside? Just to mark them out. Here's a bullish fair value gap. Here's a bullish fair value gap. These you could consider both breakaway gaps. Price never returned to them. Two breakaway gaps in a row might even just give you enough confidence, to take a trade on a 50% pullback when this low came here. I don't personally do that, but that might be something I look at in the future, is stacked up breakaway gaps on a 50-minute time frame. Sounds like pretty good high probability to me, but I'll have to backtest that more. Speaking of backtesting, I just signed up for FX Replay. That is going to be a game changer. That's like trading live on fast forward, so you can get in all the reps to do all your trade simulations. So none of these bullish fair value gaps price never returned to, so I wouldn't have taken any long trades in there. There might be some in a 5-minute, but just based on doing our hindsight looking at 15 minutes, I'm going to stop there and look at both side by side. And just reviewing, journaling this, saving it in my documentation, because if I see it again on future CPI or any other red folder news days, I'm going to ingrain it into my brain so I can take advantage of it. So with that, I think I'll leave you. For the thought of the day is, when there's major news events, sometimes the best trade is no trade. Do not forget that one. I didn't lose any money, didn't make any money, but I didn't lose any money. So the number one rule in trading is protect your capital. With that, I'll leave you for today. We'll check out tomorrow's Friday. Probably won't be trade much. We'll see. But remember, tomorrow is not promised. Live today. Take care.